Good afternoon, ladies and gentlemen. Thank you very much for joining us today at SquirrelSave's Invest with $1 Insights to SquirrelSave webinar. I'm Gabriel from Advance Public Relations, and I'll be your host for today. Before we begin, we have some reminders for all our attendees. If you have a question you'd like to ask, do feel free to use the Q&A function that is located at the lower right-hand side of the screen. We'll try to answer your questions at a later part of the webinar today. Also, if you're new to SquirrelSave, do take advantage of our Invest with $1 promotion. All you need to do is to sign up for a new SquirrelSave account by tomorrow, and you'll get a $1 deposit into your investment plan upon successful registration. And also, we'll be picking 5 lucky winners today who will win a $5 deposit into their SquirrelSave account. If you'd like to register for your account, simply log on to www.squirrelsave.com.sg. Now, artificial intelligence, or AI, has changed the way we work and we live. Right now, AI is also used in investments. SquirrelSave aims to help investors to invest smarter, even with just $1, and to help people to reach their financial goals based on their risk profile. Without further ado, we'd like to invite Mr. Victor Lai, founder and CEO of SquirrelSave, to share insights of using AI in investments. Victor is a corporate entrepreneur with over 25 years of cross-industry experience in investments, insurance, and healthcare. A chartered financial analyst and a certified financial planner. Victor has a Bachelor in Economics first-class honors from the University of Adelaide. Victor, please.
Thank you, Gabriel, and welcome everyone to our webinar. SquirrelSave wants to bring smart investing to anyone, anywhere, anytime. First, some disclaimers and points about the material involved. There are indicative numbers and so on, so please seek professional advice if unsure. A quick introduction to myself. I have many years of experience, as Gabriel said, in investments, insurance, and healthcare. And the one thing I discovered is that we're all dealing with the same customers across different silos, but the thing that binds all your needs is data. So what I'm doing is using AI, which is now simple and available to do things better for everyone, starting with saving, and then we'll move on to protection, care, and rewards. So I'm happy to launch and announce SquirrelSave, $1 for a global portfolio. And yes, it can be done.
Investing is never simple. So much information, too many products. How do you protect your assets? SquirrelSave solves these problems for you. Tailored to your age, assets, and investment objectives, SquirrelSave provides a personalized asset management solution. Works 24/7 for every stage of your life based on your needs. The transparent SquirrelSave algorithm is built on Markowitz's Nobel Prize-winning modern portfolio theory. Your tailor-made portfolio will be diversified across different investment markets with exposure to domestic and global assets, seeking returns while mitigating risks. Our machine learning AI algorithms have been trained with more than 12 years of past data and 3 years of real-time market information. SquirrelSave goes beyond traditional static asset management by adjusting to real-time market changes in line with your personal risk profile. By dynamically allocating across asset classes with low or negative correlations, SquirrelSave controls volatility to preserve and grow your wealth. We deliver good risk-adjusted returns consistently. We make low-cost investing available to everyone. We innovate by using AI and machine learning. We make global investing easy for everyone. We create value for you. No knowledge needed. Simply decide your risk profile and we do the rest. More than 12 years of training, tracking 574,000 real-time global factors and analyzing over 21 million data sets. Presenting your personalized portfolio in seconds, covering 5 continents, 15 asset classes, 35 countries, and over 2,000 products. SquirrelSave. Smart investing for anyone, anywhere, anytime.
So that was a very quick introduction to the overview of SquirrelSave. But let's start with the basics for everyone. Whoever we are, we tend to chase returns, being human, but it's important to manage risk first. So with AI, we're addressing that problem. The long-held understanding of investing is the free lunch in diversification to manage risk. And once we can diversify, we can target the returns that are suitable for our appetite. Sorry to talk about lunch at 12. You must be forgoing your lunch or munching away, but let me stimulate your taste buds. First of all, look at the pizza. So you can see that the pizza has different slices, but conceptually, each slice in a pizza represents a different taste, a different level of spiciness, if you like. By mixing the different levels of spiciness in each slice, and by changing the proportion of each slice, we can come up with a combined pizza whose spiciness overall meets your taste buds. So that is a conceptual way of presenting to you at lunchtime the concept of diversification. You can imagine to decide how much spice, how big a slice, and so on. It would not be humanly possible. And that's the challenge. So what we are trying to do is to give you a pizza with the right level of combined spiciness, but covering tomatoes, chilies, anchovies, etc., etc. That gives you diversity, but at the same time, it meets your taste. And that is how we use the AI to achieve this investment outcome of good risk-adjusted returns. So at the end of the day, the ingredients, what do we use in the pizza? So we use investment products, but as you know, there are different types of investment products. So on this table here, for example, you can see stocks, you can see exchange-traded funds, you can see unit trusts, bonds, insurance savings, and of course, bank savings, which people feel is at the lowest of risk, but it has risk. The risk in a bank deposit is still the risk of the bank. So there is no such thing as no risk in investing. But there is low risk all the way to higher risk. And as they famously say, the higher the risk, the higher returns. But I also tell you, they've been telling you only half the truth. The higher risk, yes, you can have higher returns, but you will also have higher losses. And that is the nature of life and statistics. Now, in our SquirrelSave, we have all these products. So what do we use? What we use are exchange-traded funds, highlighted in yellow here. Why do we use exchange-traded funds? Because exchange-traded funds are themselves, like unit trusts, diversified because exchange-traded funds contains many lower-level underlying investment products, such as bonds and equities. But they are diversified, and not only that, they are listed on an exchange. That's why it's called an exchange-traded fund. Unlike unit trusts, which are diversified but are not listed. So the difference, as you can see on the right-hand side of the screen, is that for exchange-traded funds, the transparency for pricing is very high because the price you see is in real time the price you will get. Whereas for unit trusts, the pricing transparency is lower because the prices they quote you is yesterday's price. And you don't know what you're going to get when you say you're going to buy a unit trust today. The price will be decided tomorrow. So exchange-traded funds, once again, is what SquirrelSave uses. Now, for the product that we offer, it is not exchange-traded funds. SquirrelSave is actually using exchange-traded funds as the ingredients in the pizza, but the pizza that you get is your individual personalized managed account, which typically in the past is only available for high net worth or people with lots of money to invest. After all, would the bank or would the salesperson want to service you for $1? I don't think so. But we have a machine. It does not discriminate and it cares for you the same whether you invest $1 or $1 million. So it is not biased because it doesn't have this human bias. So you can see on the table below on the screen, The return in our SquirrelSave can be low, medium, or high, depending on what you want. You can select. The risk can be selected. The knowledge and effort required is low. The minimum sum is very low. You can start with $1, but invest as much as you can. Pricing transparency is high. Cost is also low because we use machines. And we're subsidizing basically the first few years of our startup. And the liquidity is high because you can get in, meaning you can deposit money or take out money anytime. So let me delve a little bit into the background. Let's face it, AI has arrived, like it or not. It's already in your mobile phones. The moment you put a search word, there's AI working. When you see an ad for a device or a mobile phone that you've been looking at and it pops out on your screen on an ad, that's all AI in the works. And today, our mobile phone is more powerful than the entire program used to send astronauts to the moon in 1969. So if AI has arrived, why are we not using it for finance? And we are using it in finance to calculate things in real time, and they can calculate faster than humans. So how did we design this program? First, we start with the data lake right now at the bottom. So we cover all kinds of data, and then we pull the data and make sense of the data. But humans will take a lot of time, but we use machines and they can do faster calculations than any of us. And then we look at the strategy layer, all right, of looking at your goals, whether you're saving for your retirement in 20 years or for your child in 10 years or 15 years. All this we take into account. We look at your risk appetite and your risk capacity, and we look at what the market conditions are now. And then we use mathematics, and these are just examples, just a few I'm showing you. Support vector machines, principal component analysis, all these are techniques of mathematics using computer power. And finally, we have the solution. We deliver you a retirement plan. We deliver you a pure investment plan, etc. And that's how we use data, all right, to structure SquirrelSave. This is just a representation of the mathematics. It is now being taught online, and you can learn if you want. It's nothing complicated or mysterious. There is no paranormal. Machines are ones and zeros. So we use machines to do ranking, classification, prediction of direction, etc. So that's how we use the machines. And these things are doing millions, billions, terabytes of data calculations, which is beyond human ability. And that's why we call it AI. And we're applying it to financial markets, which today we know are connected 24 hours as the earth turns. How can I, as a human manager, and I used to be a fund manager, tell you that I am now able to track the markets? I'm not. No human manager can. They can only speculate, gamble, or trade. But our machine is doing smart investing. So how do we build our machine? First, we built our machine learning algorithms. Machine learning is a form of AI. And below machine learning, you have very different types of AI, like neural linguistic programming, natural language processing, etc., etc. All right. The next thing we did was we decided on which products do we map the AI into. And I showed you earlier, we decided that exchange traded funds are the best deal for any investor today. And what we do is we actually want to make sure that the traditional business models where they want to charge you high fees, they want to churn your account to generate stockbroking commissions, we don't do that. Because of my knowledge in stockbroking, asset management, private banking, wealth management, insurance, and so on, we know that every one of these players want to charge higher fees. So what we do is we use machines to optimize the fees, to lower it. And in fact, SquirrelSave is putting some money in front to subsidize the small investor so that we take the hit on the commission. Not only that, we have developed omnibus capabilities that can match our members internally without having to pay brokerage. So that's how we are saving money for clients using our design. So finally, today, the topic, $1. How can we do it? It's very simple. We can use AI and calculations to fractionalize shares. So you can have 0.001 of Alphabet, which is Google, right? Which is $600 US per share. Just to buy one share is $1,600. How can we give you a portfolio for $1? So we fractionalize shares, all right? And even for $1, you can have exposure to things which you can't afford for even buying one share, right? And so for $1, you can get an exposure, but instead of stocks, we use exchange traded funds to give you that diversification. And you get your own portfolio, more importantly, your own portfolio, even if you start with $1, all right? So that is possible. Now, with this $1 or $1 million or whatever amount you invest, our aim is to target the highest predicted return using statistics, all right, for the risk profile that you tell us you are comfortable with. Risk profile or volatility, think of it as the roller coaster ride. Some people cannot take even a minor roller coaster ride. Some people can take a very big roller coaster ride. So that is a simple analogy on risk. You decide the risk. Our AI works 24 times 7 to find you the portfolio that by statistical prediction and using AI would most likely match your risk. So the value proposition of our system, SquirrelSave, is number one, we use algorithms and not human emotions, because as a fund manager, I used to decide what to buy and sell, but I can't track the whole world. And what I buy and sell may not be consistent because it's based on my own personal beliefs, my mood of the day, and so on. So we remove the human bias. Number two, we can give you a portfolio that's your own. In the old days, we used to pool all of you together, minimum 1,000 each, if not 50,000. Otherwise, I won't serve you. But today, for $1, you get your own portfolio. Number three, it is a global portfolio, not one that only covers Singapore. Look, the world has changed. We're no longer focused on our own country. It is a global, interconnected world, so investing has to be global. And you can get it for $1. Number four, fees are very low because we want to bring value to you. And that's why I decided to make a change and not manage money for you directly, to use machines. And number five, we are going to engage you every day. You can see through your mobile app, your portal, but it's not to trade, but you will also be able to get rewards. And that's what SquirrelSave will be working on in time to give you rewards as part of a more holistic approach to wealth. So in essence, SquirrelSave makes global investing easy, all right? There is no investment knowledge needed, no decisions to make. Start with any amount. The most important thing is know how much risk you can take. Now, I also want to introduce that we have innovated in the whole sales process. If I'm going online, I want to make sure that it's easy for you to understand what is your own risk profile. If you're not sure, just play our game. And here, I'm going to show you a little video to give you a flavor of how we use data, analytics, and human psychometrics, human behavior, for our AI to try and guess accurately what your risk profile is. So to answer some simple questions, which even a child should be able to answer, your age, then we will ask you, what's your investment style? You like to listen to people. Then we ask you, what's your time horizon? Short-term, 1 to 3 years, or longer-term, more than 5 years. And then we ask you, are you nervous? Those 5, 10, 20%. Then you play a game, guessing which part on the screen contains a ball. All right? You have 6 rounds. For each round, there are rewards, but there are also penalties. And during the 6 rounds, the rules can change. So depending on the rules, you have to decide, do I want to take a chance or do I not want to take a chance? But even if you avoid taking a chance, you may have to pay a penalty. So the AI is watching your every move in reaction to rewards and penalties to decide what is your risk reward behavior. Then plugs into our global data algorithm, which works 24 times 7, to tell you which portfolio suits you best. And that is our gamified risk profile. The portfolio is generated instantly, but we felt that human psychology wanted to see the squirrel running, believe that the AI is working. Actually, it's working instantaneously. But we had to change the there you are on the screen. Take the portfolio, and it says for this portfolio, what the returns could be in history. So with that, I want to tell you that if you invest typically in unit trust, you should consider switching out and coming into an AI-driven portfolio like SquirrelSave. Because in Singapore, across the whole world, our unit trusts are among the highest and most expensive in the world. So you're paying 1 to 1.5%, you're going to pay much lower at SquirrelSave, 0.5%. I want to show you some performance statistics, and a lot of people ask me, I'm nervous, AI will go haywire during a crash. I told them I've lived through enough crashes to know it's the humans that go haywire. We tend to buy high and sell low. But COVID-19 gave us a chance for the AI to demonstrate its behavior. So I'm going to show you some numbers. During COVID-19, which occurred in February, the markets collapsed globally on February the 19th. And now we can look back as though we're very smart, but at that time, we all didn't know. The markets bottomed out on the 23rd of March. But during this time, February to March, the S&P 500 dropped 34%. That's terrible. So what happened to our SquirrelSave account? This is an actual real account. It dropped only 10%. And I want to tell you, I started beta testing our own algorithm on the 1st of June. So what you're seeing on screen is the first portfolio, all right? I do not want to look at short-term returns, but this is the best I can do. The first portfolio started in June 2019, all right? It dropped 10% during the March, all right? Versus the global, which is 34%. So I'm actually quite happy that the AI was very calm and collected. It didn't fall as much as the market. Then let's say 3 months later, what happened? In May, 18th of May, the S&P recovered, but it was still 14% below the peak. Now, if you look at the same portfolio, we were only 1% below our previous peak in February. So again, not only did SquirrelSave limit the downside, but it was very fast to pick up as well. Now, what happened when we fast forward to 18th of August? 18th of August, all right, we look at the portfolio, the value is now 17,000. The portfolio started 1st June 2019 with 15. So what is this portfolio saying? The portfolio says, and this is for a very aggressive portfolio, the first portfolio I started, 15,000. It rose steadily to 16,000 in January 2020, and then it got hit by COVID and crashed, but it has recovered. On 18th of August 2020, it showed a return of 15.6% in 14.5 months. You analyze it, it's roughly about 12.9%. I'd say that's pretty good. On the right-hand side, how did we do it? Because the AI is diversifying, and you look, it's got 11 asset classes, including cash. I can tell you for a fact, as a human being, I can never manage your money doing this. Not for 15,000, right? And the machine can do it. And not only that, very interestingly, look at gold, GLD. The machine, for some reason, put us in gold, 27%. That helped us when the market fell, and that helped us when the market recovered. So the AI knows something, because as a human, I would never invest in gold. It's a fact. In all 25 years, I would not invest in gold. But the machine can, and it has. So the machine is pretty smart, but let's look at the $1 portfolio, which is the topic for today. Here we're looking at a conservative portfolio, and I started this after the market recovered, and we wanted to see how it performed. So as of 18th of August, it showed a 2% return. $1 became 102. That's 2%. If you analyze it, it's roughly 8%, but I wouldn't do it. It's short-term return, but I'm just saying that we can do something for you for $1. And what did we do? More importantly, is the pizza. We divided your pizza into 10 slices, including cash. Can you imagine? As a human, I will never do it for $1. No way. It's not worth my time. But the machine doesn't care. It serves you, and it puts you 14% in gold. So this is a conservative $1 portfolio. Let's look at a very aggressive portfolio. And you can see, started also in May, and with $1, after 3 months, it was $1.05. All right, the machine can manage money. All right, and it diversified your aggressive portfolio into 9 asset classes. And it has gold, which a human typically would not buy as a fund manager. Why? Because it doesn't generate enough fees. All right. So herein lies a $1 portfolio, which I'm showing you. It's possible. Yes, you can with SquirrelSave. A $1 global portfolio. Thank you.
Okay, thank you so much, Victor, for your sharing. So now we're going to open the floor to questions and answers. So, so to ask a question, all you need to do is go to the lower right-hand side of the screen using the Q&A function and type in your questions. Right now, we have a few questions streaming in. So, Victor, just to ask, can you see the questions on your screen?
Yes, I can.
Great. Okay. So, yeah. Would you like to answer the first question?
Okay, the question is in relation to the transaction process for non-residents, right? Yes. The question, therefore, is relating to whether or not they can use certain methods of money remittance to Singapore, which obviously will go through some exchange rates. And can SquirrelSave accept funds from third-party regulatory approved remittance providers? And can it be remitted back? Okay. The answer is currently SquirrelSave accepts transfers into SquirrelSave's third-party custodian bank account. We are regulated by the MAS. All customer monies are kept separately from SquirrelSave, and that bank, when you sign up, you will be told which bank that is, and you transfer money to that bank. So the money, first of all, is not held by SquirrelSave. All right, it's managed for you, and a bank is able to see that money, receive that money, and so that's safety. Number two, the way the money comes into the bank that we appoint, all right, to receive your money, you can send it from your bank. If you are a Singaporean, you can send it from a Singapore bank through internet banking transfer. Our SquirrelSave will generate a unique reference code for you. So when you do the interbank transfer, you put the reference code, and when it goes to our custodian bank, our AI can pick it up and know who it is for. What if you're not a Singaporean, which is more the question? If you're not a Singaporean, if you have a bank account, say in another country, the first thing is that our SquirrelSave is a Singapore-based asset manager and is meant for residents. But if you want to invest as a non-resident, then you must be very clear that SquirrelSave never asked you to or solicited you in your country. You came to us. So if you want to choose us, despite knowing that we are doing it for Singaporeans, well and fine. But you have to check with your own country, with your own advisor, your own accountant or financial advisors if you want to come into Singapore. Now, having done that, you can send money from any of the banks in your country to Singapore, and that is fine. And you, of course, will be subject to the normal compliance checks. The other question is, what if you use non-bank remittance providers? Right now, we haven't tied up with non-bank remittance providers. There are a few well-known, and you've mentioned one in your question, so I will not mention the name. But we are hoping to tie up with some of these remittance providers because the truth is, I'm trying to bring value to customers, but today a lot of financial institutions charge too much for a remittance. And if you send only a small amount of money, the cost is too high, in my opinion. I hope more technology providers will come in to disrupt this part of the bank value chain. They're earning too much from people with too little money. And there are a few fintech providers. We're hoping to talk to them to partner us so that people can remit small sums of money without paying huge fees. So we're looking into that right now. Okay, next question. What is the revenue model for SquirrelSave? The revenue model is simply from management fee, which is very low. to start with. It's 0.5%, and I keep it flat so that it's not complicated for anyone. Of course, if you want to invest much more, give us a call. My belief is that I want to provide the service. So if you have huge sums, let me know. It doesn't have to be 0.5%, right? But right now it's 0.5% flat, and it's practically in fact, practically the lowest among all the digital investment players who start at 0.8% or something. We're starting at flat 0.5. But truthfully, I believe that the real way to earn fees is through performance, because we don't want you to come in and then have no returns. So SquirrelSave believes in performance using AI. So we share in your returns, because I believe through all my years of experience, I do not want to take money away from you, from your capital. I want to deploy your capital, put it to work, and if we generate return, which is something you don't have now, we can share a little bit of it with you, right? And that is set at 10%. So for the high net worth customers that I used to serve and still do, we normally charge 2% and 20%, right? 2% management fee, 20% of your profit. Here, we're charging you 0.5%, and we're only taking 10% of profit. And it's profit that you today do not have. And only if you get the profit, then we get paid. And I think that's good. That's our revenue model. Next question. Does it mean technically the customers don't own ETF shares? No, you own shares. These ETFs, whatever fractions, belongs to you. All right. We have built the system that accounts and tracks how many decimal points of each ETF you have, and it's yours. That answers the question. Next question. What are the best backtesting results of the algorithm? The backtesting results are good, but again, I always tell my team, backtesting is only to prove that the algorithm meets a statistical standard. But backtesting is not how I would benchmark. I benchmark on actual returns, and that's why I showed you and shared with you actual portfolios. All right. Of course, each person has your own portfolio. We don't run a fund. We don't have a number because we don't run a fund. You have your own portfolio, and guess what? You can top up anytime. You can withdraw anytime. How do we measure performance? So at the end of the day, we measure by how much you put in, minus your withdrawal, and what is the total, all right? And you decide. So each person's portfolio has its own performance. Why? If you come in when markets are very high, the probability is that on some days, you'll find that it's dropped. But if you come in when markets are very low, on some days, you'll find that it's gone up. To me, that's not the way to measure returns. That's called trading or gambling or speculating. We're not in that business. SquirrelSave is in long-term investing. Fix your risk and let the markets run. Keep your monies invested for as long as you can. I would recommend at least 3 years, but 1 to 3 years is good, because in all our studies, all crises, within 1 to 2 years, the markets recover, all right? But it's easy for me to say, but I've lived through enough crises. Emotionally, we are so depressed. We keep looking at our returns when it's negative, or worse, we don't want to look at it. But when it's good, we keep looking at it and we get tempted. So that's why I want to remove the human emotion from the investing behavior. You can still trade on your own, but put money with SquirrelSave for the longer term. So you don't have to worry that the machine will just look after it even through a crisis or the latest crash like the COVID crash. The next question is the worst case scenario in investing SquirrelSave. To be honest, statistically, the worst case will be 0, like any investment. But the probability would be low. The probability is not 0, but the machine's job is to reduce the probability of 0 and to reduce the probability of going down to 5%, 10%. And as you can see, COVID, it worked. And the process is transparent. It's called diversification. And the mathematics are all out there on YouTube for any student or child to learn. And I want to teach children about investing. In fact, we launched a Kids Save account that allows you to start with $1. Okay, next question. What is minimum age? I just talked about kids. Yes, kids cannot open an account. the minimum age is 18, but any parent above 18 years old can open unlimited accounts for your children. So if you have 10 kids, and we promote people to have 10 kids in Singapore, my goodness, you can have 10 accounts for your children. You can, but you have to be 18 or above. Next question, is SquirrelSave MAS regulated? Of course, we are regulated with a capital market services license for full retail asset management into collective investment schemes like exchange traded funds. Next question, are buy-sell instructions executed immediately? You do not give us instructions. We run an investment service. It's called discretionary investment service, normally available to high net worth customers, rich customers, inverted commas. I use AI to bring it down to everyone. It's available now, and we manage it for you. You don't have to do the buy and sell. Then when you go and trade with your stockbroker and trade, and good luck. Maybe also go to the horse races, buy Toto. So, but no, at SquirrelSave, it is smart investing. We do all the decisions for you, and we do not churn the account. All right, we do asset allocation. We don't do trading. Next question, can we pick and choose asset class? I've answered it, no. It is a discretionary service. If you want to pick and choose, there are other providers out there, and you pay them the transaction commissions. We don't do that. Okay, I've answered all the questions on my screen. Any more?
Okay, so Victor, we have a question here. So next question is,
I see a next question.
Yeah.
Would there be any income distribution during the interim? Well, our AI picks what you call ETFs that has less dividend distribution, and that is to avoid paying taxes, right? Which is fine. Where there are dividends paid, it is reinvested. So we push all the capital to work. Okay, that answers the question. Next question, I have zero investment experience. If I start $100 for 3 years and the question ends there, I suppose maybe the attendee, the participant is asking, if I start with $100 for 3 years, what's the probable return? I can't answer that question. It depends on the risk you take. And I would say this, that my own experience historically is that I would like to make sure that it should be above 5%. And why? Well, for us, if we want to invest longer term, we can put money in the CPF, right? In CPF, up to the first 60,000, technically, through the generosity of the government and the CPF board, you can actually earn up to 6%, right? But I think the statutory rate at the current low interest rate is about 4% minimum. So anything that we want to invest, I feel should be above 4. So I say 5. So between 6 and 4, 5% is what we target for most risk classes, all right? On a 3-year time horizon. That's the question. All right. Any more questions? Yes, one more question. What if I decide to close my account after 3 years? Okay. Right. The fees, that's the question. The question is, if I close my account in 3 years, what are the fees? Okay, so let me explain. We charge a management fee, all right? And that's deducted from your account every month. All right, so it's 0.5% roughly divided by 12 roughly. All right. So if you invest $100, 0.5% is 50 cents. So you invest $100, the full year fee is 50 cents, right? So if you, after 1 month, you take out the money, it will be 1 divided by 12 times 50 cents. It's very cheap. Performance fees are calculated every calendar year end, all right? And that's 10% of your profit above the high watermark. So what it means is that we don't double charge performance fee. So what do I mean? So for example, if you come in today, this year at $100 to invest, let's say at the end of the first year, it goes up to 110. So your profit is 10. So our fee will be 10% of $10, which is $1. Let's say the second year, the 110 goes to 90, all right? Do we earn a performance fee? Answer is no, because the return is negative, right? Okay. Then let's say from the $90, the next year it goes to 110, right? Do we get a performance fee? The answer is no, because the last time we earned the performance fee was when your assets were worth 110. So that's the last high watermark. So we have to cross 110 to begin earning performance fees. So we don't double charge, in other words. So that's how the performance fees are calculated. And if you withdraw early, all right, before the calendar year end, we do charge a performance fee on a prorated basis. All right, so that's how it's done. Okay. Okay, so can I use CPF funds? The answer is no. We have approached the CPF, but I think that's not allowed. They only allow you to invest in CPF approved unit trusts. We don't map our AI into unit trusts that are approved by CPF, and therefore you cannot use your CPF funds, at least for now. Okay, thank you. That's all the questions.
Okay, so if you have any more questions, please feel free to use the Q&A function and type your questions, and Victor will be glad to answer any of your queries. Okay, so Victor, just to ask, right, given the fact that right now interest rates are quite low in the current market, so what is your take of opinion in terms of investment in such a environment?
Well, there's a reason why interest rates are low, and as we all know, we're in the middle of a pandemic. It's very sad because in this pandemic, my heart bleeds because it's the low income and the poor that suffer the most. And not only that, we all know that the low income are the people losing their jobs. In a way, I started SquirrelSave because there's a widening wealth gap, and the middle class, what we call the middle class in Singapore, is actually high class in other countries. The middle class in Singapore are very fortunate because they have so many ways to grow their money, and some, of course, go to the horse races or whatever, and some would invest in stocks, but they're actually trading. Those who can invest, the banks want a certain minimum sum. But for the low income, even those in Singapore, what are their choices? So the first thing I wanted to do is ask myself, can I still do what I used to do for the last 25 years? And the answer is no, because artificial intelligence in the last maybe 5 to 6 years has become available. So why don't we make use of it? And so that's why 2 years ago, I started Pivot, which is the company that owns SquirrelSave. And then it's only after 6 to 9 months of trying to persuade banks to use my technology. And they're right. Why would they want to use my technology when their fees are going to collapse? They're going to charge you much less. Who wants to do that, right? But I said we should. So we decided to go and launch our own direct consumer SquirrelSave. So SquirrelSave is our B2C brand. And it's tough because, which oil company wants to support an alternative fuel, right? But we know it's good for the world. So coming back, at today's low interest rates, even the middle class is earning so little. It's less than 0.2% in a bank savings account. So the answer, therefore, is if you can't take risk and you can only accept the risk of the bank's balance sheet, then stick with the bank. But if you can take more risk, why are you keeping money or all your money in the bank? You can put some of your money into higher risk investments. And many people think that it's buying a stock, one stock, two stock, that's investing. It's very dangerous because it's not diversified. So you need to take the volatility of stocks. So our SquirrelSave has a lower volatility than stocks, right? And we offer within our AI for you to set your risk at 1, 2, 3, 4, 5, let's say, and you decide. Once you decide, our AI then does what you command and chooses a portfolio based on AI predictions. And because it's a machine, it can learn from its mistakes, right? A human will say, no, I'm not wrong, because it's losing face when I'm a fund manager and a fund is not doing well. And it's hard for most fund managers to say, I made a wrong decision. I made a wrong trade. So our AI does diversification. It's honest because it's a machine, right? So in this low interest rate environment, consider if you can take more risk, deploy it into other investments, but do consider SquirrelSave.
What a perfect response to my question. Okay, so Victor, we have another question from Mr. Poon. He is asking, do we need to open a CDP account or not?
The answer is no. It's very simple. You open an account directly with us. There is no CDP required. It's very easy.
Okay, so we hope that Mr. Poon will be...
Just to answer the question, to give you more color, The securities that we buy are custodized by a third-party custodian. It's not controlled by us. So we cannot play a fool with your holdings. Even if you own 0.001%, it's held by a third-party custodian. So it's all very transparent. Okay, thank you.
Okay, so we're done with this question. So any more questions from the floor? Okay, so in the meanwhile, while we wait for just more questions, so we still have around 10 more minutes left. So Victor, okay, so also just to ask you as well, now we understand that diversification is the key. So could you just, like share some pointers on how SquirrelSafe can help investors in diversifying their investments?
Well, diversification is another webinar on its own, but the way I try to bring it across is to use the example of a pizza. So our AI is able to track the prices of what you call investments, right? Every investment has a price, but we need the price to be statistically significant. So if you look at a unit trust, it's not significant because that's not the real price. It keeps moving on a last day basis because it's a dinosaur. It's an old paper-based product. So we go for exchange traded funds because it's traded on an exchange. There's a buyer, there's a seller. The price is actually real, and our machine can plug in with API. It's a technical term, meaning the machine is watching the exchange, thousands and thousands of securities being traded. I can't do it. So the machine is able to track every price point, all right, by the minute, by the second. What it does is that it uses its computational power to basically compute probabilities of it going up or down based on patterns. That's machine learning. And it then combines all the thousands of data and it assembles different pizzas in the millions of pizzas in 1 second. And that one pizza has the highest predicted return that matches your spiciness, your risk appetite. It says that's your portfolio. Now, once it does that, and that's for a first-time SquirrelSafe investor, that's the portfolio you get. Now, does it mean the next day your portfolio will change? The answer is no, it won't. Remember I showed you a slide where I do not want people to churn your account and pay brokerage and so on. So what we do is we build an optimizer for trading that says that if the commissions are not worth the predicted return, do not change. So we let the machine run it now. And so we find that the turnover is actually very low compared to a stockbroking account. So it's very low because we're doing asset allocation, we don't do trading. So through this method of using data, computing power, connectivity, and this principle of diversification using the Markowitz optimization principles, we're able to bring this value to the end customer. It's very simple.
Okay, I have a question coming from Mr. Ang. Could the organizer share the replay version after this live session? Okay, on behalf of Victor, certainly, because in fact, what we're going to do is we have already recorded the live webinar, and we're going to edit it, and we're going to upload on SquirrelSafe Facebook. So if you are interested in investing or like to know about some snippets about investment, do follow SquirrelSafe's Facebook. And also at the same time, if you are also like to start investing or like to just, if you are new to investment or if you are simply on the lookout for good investment platforms, do check out SquirrelSafe and to see whether, you should sign up for it or not. So log on to www.squirrelsafe.com.sg, and if you're interested, sign up for an account. Okay, so we have another just few minutes left. So just to reiterate again, we have this invest with $1 promotion that will end tomorrow. If you're new to SquirrelSafe, all you need to do is log on to SquirrelSafe website at www.squirrelsafe.com.sg, start an investment account with SquirrelSafe, and SquirrelSafe will deposit a $1 into your plan once you're successfully registered and open an account with SquirrelSafe. This promotion will end tomorrow at 11:59 p.m. So grab hold of this remaining 1.5 days and sign up for an account. And if you have an account with SquirrelSafe, You'll also get stand a chance to win $5 deposit into your SquirrelSave account, as long as you have an account with SquirrelSave. So grab on this opportunity and open an account with SquirrelSave right now.
Thank you, Gabriel. Thank you. Thanks, everybody.
Okay, Ken. All right. So if there are no questions, we're going to just end this webinar today. So thank you very much, Victor. Thank you so much for your time, and thank you to all our attendees for taking time today at this our webinar. So Ken, so Victor, any concluding words before we end this webinar proper?
During these times, it is important to help the lower income and those who will never be served, and even those who have bank accounts who will be underserved. Please tell them what AI and our technology in Singapore now can offer. I've seen too often people who queue up in queues trying to withdraw money, being asked to buy unit trusts or other investment products that earns a fee that they should not pay. And Singapore has one of the highest fees in the world. So please give this advantage of using AI to your friends and support startups like us, because like how the oil companies will never support alternative fuels, we need to make sure that we can bring value to the world and to people at the end of the day. Thank you very much.
Okay. All right. Hey, thank you so much for your time. And okay, Ken, that's all for today. So hope to see you again in our next SquirrelSave webinar. And thank you all once again for your time. Okay, wish you a happy weekend ahead. Goodbye.
Bye. Thank you.